Home sellers in 2023 need to know about bridge loans. If you're in a competitive offer situation, you may need to be able to buy a home non-contingent upon the sale of your home. Let's talk a little bit about how bridge loans can help with that process.
Bridge loans are used to borrow equity prior to your home selling. If you have cash assets, use those. It's generally less expensive. They're short-term loans with risk, so you'll pay fees. If you need this, let's plan for it. We work with banks and credit unions, each with their unique guidelines. We work with them and you through the entire process.
So, how much can you get from a bridge loan? Some of these banks and credit unions will go as high as 90% of the value of your home, but most of them will prefer to go only as high as 80% of the value. So, for example, let's assume that your house is worth 300,000, and let's assume that you owe 200,000 on it. The bridge loan will go as high as 90%. 90% of 300,000 is 270. So the bridge loan that you could get is the gap between 270 and 200. You can get as much as 70,000 from the bridge loan that you're going to use that money as down payment towards the new home.
So yeah, now you're going to have two loans on your current home as well as a loan on the home that you're purchasing. You're going to have to qualify for all three loans, but the bridge loan is going to be a payment of generally interest only.
So let's look at the cash flow of how a bridge loan works. So let's assume for a moment that you're closing on the home you're buying at the end of June. So on July 1st, you'll have one mortgage payment. That mortgage payment is on your old home. Okay. Now let's assume your current house is not sold yet by the end of July. So that means that on August 1st, you're going to have three payments. You'll have the payment on your old house, you'll have the bridge loan payment, and you'll have your new payment. Okay. But now let's assume that you have closed on the sale of your home at the end of August. So now on September 1st, you will have already paid off your old house. So you've gotten rid of the bridge loan and your old mortgage payment. So you only have your new mortgage payment. Okay. So generally speaking, the goal is to have your house sold within 2 or 3 months after your house closes. There's two strategies that I want to point out that people use with bridge loans. One is to make an offer that on the house you're buying with a longer closing date, let's say 60 days, because now you have an opportunity. We'll have you approved for a bridge loan, but you have an opportunity to get your house sold and closed, so you never need to take a bridge loan out. Strategy number two is on the house you're buying, close early in the month. Close, let's say on July 1st. Now we can make your first payment due 2 months later. We can make it due September 1st on the new house. And that way it reduces the possibility that you will ever actually have to go through a month where you're making three full payments.
Yeah, bridge loans have a purpose. So if you don't have another option for a down payment, let's go ahead and plan for it.
Love to hear from any realtors or buyers in the comments below. Have you used a bridge loan? How did it go for you? Or what kinds of questions you have? We want to get back to you with that information.
Also, go ahead and subscribe, comment, and share on the video, and hit the bell in the corner for future notifications.
For more information and our contact information, check out the description below.